Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your agriculture update for this Tuesday. And we're now at the 6th of March, 2018, and the time right now about 1:37 p.m. Central Standard Time. It's been a crazy, crazy day. What's impacted the markets is questionable weather. If you're in the grains, you were down a little bit in the wheat, but we don't see that ending. We see the Central Plains, the Upper Plains, Southwest, all in serious drought issues still. We're not seeing a change in that. We do see some profit taking hitting the soybean market and the meal market. In fact, meal market is acting like a market that wants to finally break back a little bit. Don't know if what the local forecasts are in key parts of Argentina, but that would probably have something to do with it. Then we've got the issue of the dollar taking a beating today at the hand of a number of currencies which are up, as it appears that maybe some reason has been hitting with the president hearing back from Paul Ryan, definitely against broad tariffs. In other words, the shotgun approach against everybody. Gary Cohn talking that he might leave the president's cabinet if that is done. And maybe the president has accomplished a lot of good with all this as well, because North Korea apparently wants to talk to America. So sometimes you got to carry that stick, if you will. You got to make a lot of noise. Can the president backtrack? Why not? If you can get something ideally out of China in terms of agreeing before tariffs even put on, they're going to cut production or do something, not going to allow their metals to come into the U.S. at these prices, could be a win for everybody. Who the heck knows? When we look at the soybean weekly chart, for the week you're up 3 3/4 cents, sitting here right now, if you will, at the 1064.5 level, and it's been a heck of a run. It's $1.17 almost straight up. When we look at a daily area chart, you had a correction today, 2 3/4 cents. And notice what's happening here. The market is now narrowing itself in. Now, until it falls apart, it doesn't fall apart. In other words, this is a pause and no more than that in the market. And what's happened is now you've got 2 inside days back to back. So we have to see which way the market wants to break out. And an inside day means you didn't take out the previous day's high or low. It's often a sign that the market's stalling. When we look at the swing lines, and this is a chart without them, the beauty of a swing line is it tells you 2 things. Number one, if you believe that the definition of an uptrend is higher lows and higher highs, it'll show it. Lower, if you're downtrend, lower highs, lower lows, and no trend will have in some manner a higher high and a lower low. When we look at this chart, we see the clear pattern of higher lows and certainly the higher highs. What number would break that pattern? That's the other thing swing lines do. 1066.5. So the market's got approximately 8 cents of play in it, and if it should take that out, what it does is damage to the chart and could create a pattern of lower highs and lower lows if that were to occur. When we look at moving averages, we get a semblance of an idea as to where balance is in the market. I look at the market that when it's over the red line, it has an upside bias. I also look at it as a number that if the market were to break, could be a number that prices go back to find, if you will, their footing. Problem is, to get down here, you have to take out 66, you'd end the uptrend. So you can, if you will, start a correction, get back down to that number, and still, all in all, have upside bias in the market. The key is you're in an uptrend, you have upside bias, and until 1066.5 is taken out, it hasn't been taken out, and the bulls have control of the market. Where might the market head? That's the other question. As we've had thrust, you've gone up to this black dashed line, which is a Bollinger Band, and that acts as theoretical resistance. From where you're at now, it's about 14 cents away, so that's pretty far. Then I look at momentum. Now, what I like about momentum indicators is often they lead the market. Number two, what I specifically like about slow stochastics is it converts itself from being a nothing to overbought, oversold, and then converts again into being a locked-in trend, bullish or bearish. In this case, as long as both numbers stay over 80, it is bullish and the market is still looking for higher prices. You don't have that in meal. In the meal market, for the first time today since when this rally began, the market's lost its red number. It got well under the 80 level. Let's go back a day. Both numbers were over 80, both over 80. This is last Thursday, both. You can see what I'm getting at. And you see that right here. And when you're embedded, prices often lift and try to make a run to possibly the upper Bollinger Band or other profit areas. However, in this case, the market has now lost that momentum, and that often, not always, but often leads to price and the 18-day average of closes coming together. The one thing it tells me is if one is long, this is a good day to be out of those. Let the market back off and see what kind of posture it has. Could this not go down? Yeah. We saw in cotton recently where the market had embedded readings, lost them, and didn't go down. It's rare. It is not the norm. Normally, and that's what I look at on charts, I play for the norms. So I am expecting in some manner the price to come down and the 18-day average to lift up to it. In the soybean oil market, notice it's higher today at the expense of the meal, which was down $5. Those in the know, how's that with the word know, K-N-O-W with quotes around it, I think they're unwinding meal oil spreads as part of the crush here. Whether it lasts or not, don't know. All you got to do is put out another forecast for Argentina and say that the weather's getting worse, not better, and it would change. Put out rain, the spreads are telling you that things are going to unwind. Right now, what do we have? Well, we have lower highs and higher lows. Absolutely no trend. The bias is trying to turn up, and if you'll notice, the market's over the 18-day average of closes. So I have momentum turning up, and that's what I should have said here. The bias is up because you're over the 18-day average. It's trying to set up an uptrend. In the corn market, you have been running against the upper Bollinger Band. That's what I'd expect when you get an embedded reading. Still bullish. Still a weather market due to what's going on in Argentina. You'd have to take out 384 to break the pattern of higher lows and higher highs. And to tell me that the trend is run out of momentum, you'd have to take this red line and close it under 80. In the wheat market, you're just getting to the embedded status. Now, let's take a look. Is it there? No. One of the numbers, 79, under 80. Under 80. So, when I said you're just getting there, you're not. You're overbought, but I want you to learn as I do these. It looks here like they're both over 80. You've always got to look at the numbers. I have an overbought market that is in an uptrend. Resistance has been hit a couple of times at the upper Bollinger Band. That number's still moving higher, and obviously it's still a weather market. In the sugar market is now fighting. Present tense, fighting a huge battle at the 18-day average of closes. The trend has been up, higher lows and higher highs. Momentum has been up, and it's suddenly starting to wane. If the market takes out 1335, the bears will wrestle control from the bulls and possibly go for the lower Bollinger Band. What's the number the bulls cannot allow to happen if they're going to maintain this pattern? They can't allow 1335 to be taken out. That means they probably fight their battle against the 18-day average at 1343, which is exactly what was going on today in the market. Now we'll see what happens. Sugar has a strong seasonal to the downside at this time of the year, so it's something to pay attention to. Now we get to the coffee. The coffee market's been fighting against the 18-day average of closes for, what, 3 or 4 out of the past 5 days or so. Came up to it there, got back up into it, and here. Today it made a run for it, hit it, and backed off again. If today's lows are taken out, you would have a pattern of lower highs, lower lows, putting into play the lower Bollinger Band. Can anything set the market off bullish? Actually, it cannot. Because you got a lower and low, even if you just soared, you'd have the lower and low and a higher high. Even if you closed over the 18-day average, you have that lower and low. In the cocoa market, it continues to be bullish. Here is a market with that embedded reading, and notice how the market's running on the upper Bollinger Band. Till it's over, it ain't over. I do not know what's going on in cotton. I feel like a complete novice in this market. What I didn't get was yesterday a 300-point gain. I get the embedded reading. 300 points is a monster gain. And then to lose that amount on the close today with an outside day down is nutty too. What else happened on this chart? Because it is important. You lost the embedded reading. That often, I can only use the word often leads to price and the 18-day average making a run for each other. We had a couple of instances back here where that did not happen. You lost it, and it just didn't do that. It doesn't work all the time. I don't know anything that works every single time. I'm sure there are things, but I don't know them. But in any case, I'd be very cautious. Again, momentum is telling you prices want to correct here. In the cattle market, all you did with all this rally today is go back to the 18-day average of closes. You ran right into a brick wall. Why? I call, and if you watch these videos, the 18-day average, the line in the sand. If the market's under it, if you rally to it, it's often a resistance point. If you break down to it from higher, it's often a support point. Is it not going to work that way all the times? Of course it's not going to work that way all the times. Is it going to work that way often? You better believe it. Take a look here. Tell me what you see. Look at the break. The market comes back, fights right here, then again here. Okay, so, and by the way, right here, look at how you fell back and did it. Go back and do your own work. You don't have to believe me, obviously, but I try to point out the obvious, and I'm always learning. I read like a madman technical journals, and I try to understand what the other great technicians, there's a lot of them out there, are coming up with. In the cattle markets, you've got oversold in a downtrend. You rally to the first layer of resistance. 148.42.5 was that number. You just missed it today. You hit 148.40. But there's nothing to be bullish on. You also have a problem in being bearish. It's very difficult to sell into an oversold condition. In the hog market, you tell me what you'd expect. Here's a bounce coming in the market 2 days ago. You're correcting an oversold condition. I'm looking for the line in the sand to be the resistance. Don't know if it'll even get there. Yesterday and today, take a look. Right to it, basically. Market turns around and stops. It doesn't stop because I'm telling you. These are things I notice. And yes, there are different moving averages you can use, and I talk about that in my charting course, and that's where you learn. These videos are free. As a free video, I'm not giving you specific buy and sell recommendations in them. I do that in my research, and that's how I'm able to pay to do all this and have my own rooms here for studios and all that. This isn't a small setup we have. It's pretty nice, actually. So when I'm looking at the markets right now, the question is, what do you do with them all? Where's the metals? Where's inflation? How's it going to impact the grains? What's the weather going to do? Well, if you want more information on this, it's really simple. All you need to do is give my staff a call, go to our website, www.iraepstein.com. You can click up here. If you're watching me on YouTube, it'll take you right to the site. Or underneath us on many sites, it says, click here for Ira's free info. Sign up for the different info. If you're in grains, you want our weather. It is written for the commodity markets. We cover Argentina, Brazil, very specifically. Our clients get that. Yeah, we'll give you a trial, but if you got to be our client in order to get this information. We have our own in-house meteorologist, full-time. People don't do that. I mean, we're a grain firm that we think really puts a lot of effort into this, and I've been at this 45 years now. I know what it takes to put effort out. Doesn't mean you're going to win. I know what the effort is, though. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.